All right, Patrick, the next big announcement and topic of conversation here is the Bank of Canada. Literally just a couple hours ago, we were supposed to shoot this show yesterday. We decided to push it to today because the Bank of Canada has released that they are keeping interest rates the same. Now, that is obviously it's okay news. It's definitely not great news. Great news would have been them lowering by at least a quarter point or showing the market that they would lower by a quarter point. They haven't done that. They've stayed steady. That's okay news because the worst news would have been a rate increase. That would have been terrible, which some people were saying could maybe happen, slight possibility. You and I didn't believe it, Patrick. But the question I think that we should dig into is tell the listeners why this decision. Now, we're not going to profess for a second to think we know what's going on in their heads, but there is some data points that's showing why perhaps they are staying steady again this month. I hope that they soon go towards lowering. But right now, Patrick, fourth quarter GDP, real GDP by expenditure came up and was up 0.2% in the fourth quarter. If you remember, just a week or two ago, we shot Rain It In, and we were kind of wondering, and I had you make a Patrick prediction on where you thought the GDP would land for the fourth quarter, because if it was negative, we would have officially been in a recession. Turns out it's not negative. It's up 0.2%, which was bang on with your prediction, Patrick.
Yeah, and I don't really believe GDP numbers anyways, but let's just say they are what they are. It's what Bank of Canada makes their decisions on. So they're holding steady. Good news. I'm now in the camp of saying 2024, I don't think there is going to be a decrease in rate in the Bank of Canada rate before the end of 2024. I think we're going to be into 2025 given what's happening. The Bank of Canada is in a tough spot because housing is what drives this economy. They definitely are fearful that if they bring rates down, they're going to ramp up again the housing market, which will be part of what drives inflation. Sadly, however, the rest of the economy is not great. I mean, it's okay in some sectors, but as we go forward, we'll talk about that in a minute. You start to see that a lot of sectors are starting to slow down. And if you look at GDP in those sectors, it's actually in the negative territory. So what's the Bank of Canada doing? Well, they're holding the rate. They're waiting for the economy to catch up to it. I think ultimately they're going to have no choice but to lower it. But that's for another conversation. We'll see what they do in the future. I do want to bring up one point though, JG, and this is one of those things that when we look at what's happening, part of slowing down an economy, rising interest rates, of course, the cost of doing business, the cost of goods is more expensive. So you're not borrowing money. It slows the economy down. But what isn't being talked about enough in my world, at least in the context of what I'm suggesting, is that when we look at taxes, our increase in taxes overall across this country have come off the charts. We'll use carbon tax as an example. April 1st, we're getting another significant hit. Now, aside from the fact that whether you agree or don't agree in terms of climate change and is it having an impact on climate change, blah, blah, blah. Here's the thing. This is also part of what cuts into the discretionary income of Canadians. If you don't have money to spend because you're also paying taxflation, guess what? You're not spending more money. And here's one of the reasons that I think that they're fearful. So we have the Conservatives going, axe the tax. Well, that all makes sense. But I think you've got the Liberal NDP government going, if we do that, people are going to have more disposable income. They're making about climate change. But if we have more disposable income, guess what they're going to do? They're going to start spending money. The economy is going to get fired up again. Bank of Canada is going to have to raise rates to try and slow it down. So I don't think they're that smart, but that would be my reasoning in this whole taxflation issue that we're dealing with. Part of taxing us to death is crushing disposable income. That also slows down an economy. I don't think enough discussions had around that.
You said the words common sense a while ago, Patrick. You actually use the words common sense and government like in the same sentence, which we know it doesn't exist. So, and at the end of the day, they really don't care about anybody's disposable income. That is not their concern. So they're gonna keep taxing. They're gonna keep increasing everywhere they possibly can, and they're gonna jam it through as much as they possibly can. That's gonna continue to happen. That's not gonna stop, and that's just what they do.
I feel so helpless.
But what they're looking at, and I was in a sense, Patrick, I got to be honest with you, I was kind of hoping for a negative fourth quarter GDP because it would have officially put us in recession, and then it could have went across the board because then the news would have jumped all over it. But this is kind of like a wah, wah, wah. It's listen, this is 0.2% in a quarter, Patrick. That is less than 1% growth in the entire year. That's 0.8% on an annualized basis. This is essentially a stalled economy, but it's unfortunately just positive enough not to get the bad headlines. And I was kind of hoping, because then perhaps we could have saw it go the other way. And then the Bank of Canada would cut interest rates, and then you might have a meaningful move on the other side, which is ultimately, I think, what we're looking for.
But here's the reality of it, JG, and that is that much of our GDP is driven primarily by immigration. If we really unpack all of the numbers, this isn't about productivity. It's not even about housing, because the housing market, for example, in Ontario is all but shut down in reality relative to what should be happening or could be happening. So much of our GDP is just from new immigrants coming into this country, spending money. It's a whole different can of worms that we're dealing with, but it is really the Bank of Canada holding a rate based on a different set of filters that they're looking at GDP through. And I believe that we're going to see the lag start to catch up. We'll start to see unemployment tick up. We're going to start to see a number of things that are happening. And, we'll see it slow down, but it's going to be a while into 2024, probably third quarter before we start to see that.
Now, core inflation has come down in January of 2024. This is another reason why I think the Bank of Canada held interest rates. From their perspective, Patrick, it's going in the perfect direction. They're not quite in a recession. They've totally slowed down the economy. Inflation has definitely come down, especially in the core. You can see it was at 4.7%. It's now down to 2.4%. Whether we agree or disagree, these are the numbers they're looking at. And from their perspective, they're doing a fantastic job based on their metrics. Now, you and I don't necessarily agree, but that is why they have decided to hold interest rates instead of cutting them. But I do think this is going to have a repercussion on our spring market. And I also think that's a reason why in my opinion, they're definitely not going to cut interest rates until we get into the spring market, if they cut them at all. Because if they cut too early, they know they're going to get a boom in real estate. There is a ton of pent-up demand in the real estate market. I see it every single day. And the minute they cut, that will start to get released. And that's not going to be good from their perspective, is what I think.
Well, and we've talked about it many times. When we look at core inflation, we have to just keep in mind costs are not coming down. Inflation is slowing down. So in other words, the speed of which we're inflating has slowed down. And that really is what we have to differentiate. For us as sophisticated investors, we have to look at the numbers for what they really are. Costs are not coming down. As we tape this today, I think gas out here in British Columbia is about $1.85 a liter. We were just in Alberta, last week. It was about $1.35 in Alberta, which is really high for Alberta. So when we look at fuel costs, we start to realize that food costs and all of those transportation costs are going to continue to increase. It's all to say this, JG, is when we look at inflation, we have to look at it for what it really is. And ultimately, what the Bank of Canada has to do is slow down inflation. That does not mean costs are going to come down.
That is very correct. All right, Patrick, let's jump into the rental market update. Now, before we jump into some stats and some charts, I do want to, as Patrick, and many of our viewers know, I run a company called Vistor Property Group and Vistor Property Management, and we manage hundreds of properties mostly in the Oshawa, Peterborough, Lindsay, Orillia, Barrie markets. And one thing we saw at the beginning of this year, and I said it on this show a couple times, is, man, leads were coming in very slow. Definitely, we had a pullback in activity for sure. We even had to adjust prices down. That was the first time in a couple of years we had to adjust prices down. Like something that would typically rent for $2,300, we had to rent it for $2,250, $2,225, maybe even $2,200, $2,180. Like we had to come down somewhere between $50 and $100 on our kind of market rates. And we play in the premium space. We only usually work with premium tenants. But what's fascinating, Patrick, is in the last 2 weeks, that has totally turned around. Definitely since the middle of February, it has picked up in a really, really nice way. I was a little concerned because typically we always see a bit of a slowdown in early January. But usually by early February, that's gone. Like that's a January thing, not a February thing. And when we got into the middle of February and it hadn't turned yet, I thought, this may be worse than I expect. But it did turn by the end of February into early March. We are definitely now things that were say the market rents 2,300, and in January I had to rent it for say 2,250. I can now rent it for 2,350 or 2,400. So we've seen it go the other way now. So it's a very good thing. And in every market that Vista Property Management runs apartments, we have some incredible tenants, and we have a backlog of great tenants looking for a great place. And that's kind of the in the trenches market update, if you will, Patrick, of what we're seeing at Vista Property Group.
Well, a couple of things, because you were having a conversation with Trusted Partners, RPM, Real Property Management, who then take it, you're based in that sector of Ontario, but of course they're also national. And then you guys were comparing notes, and this is pretty steady right across. So really it was about what happens this time of year. That was really what was driving that. But I want to point something out for investors. JG, you're pretty experienced. You're in the property management business. You're in the development business. Vista's doing a lot of things, but you get caught up. You're going, holy cow, what's going on January, February? Listen, there's an emotional component of it that even gets the best of us, but we have to go back to what the fundamental data is. The rental market is not going to collapse because we've got too many people moving into this country that need a place to live. And so ultimately, a seasonal thing, nobody wants to move in the cold of January and January 1st. February, they're going, okay, well, we can start to warm up. So now we're going to start to see March and April. Here's my prediction. Here's my fearless prediction. Rents are going to go even higher right across the country, including your neck of the woods. So that's my fearless prediction, because the data doesn't change and the facts are the facts. We got that happening for us.
We've definitely seen that, Patrick, and you can see by these couple charts I'll flash on the screen that, we've talked about this a lot. There's record population coming into the country. Even though they've slowed it down, it's still record population because of how many have come into the country in the last couple of years, and there's not enough housing. And that is having the rental prices continue to surge. You can see last year, Patrick, on average, rents went up 8% on average across the country, which is the most they've ever gone up since we've been tracking this number in the early 1990s. It's the most ever. And it was only higher than the previous year, which was 7%. And so these are really, really big increases. And the only thing that's going to fix this is when the government facilitates the building of more inventory and helps get more inventory online, not remove inventory like the crazy, insanity, stupid shit that's happening in BC right now. That's only going to hurt. It's not going to help.
Let's be clear. The government isn't going to fix this problem. Entrepreneurs, builders, contractors are going to fix the problem, but they're not going to fix the problem until something happens with rates. Oh my gosh, what a mess.
It's a mess. Vacancy rate across the country is at record low, just about every single market. And again, we talk about this, folks. You have got to look at your local market to see what's happening in your local market. Real estate is regional. There's no such thing as a Canadian real estate market or an Ontario or a provincial real estate market. You have to look at your region. But at the end of the day, Patrick, if you're looking at what's happening in the rental business, rates are going up. You have a lineup of people looking to rent your apartments if you have good product. And that's because of the housing shortage we have. And that's going to continue. I don't see an end in sight for it.
I agree. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.